I'm Daniel LeBeau, and welcome to the Fourth Revolution, where I discuss stocks for your portfolio of the future. Today I'll be discussing the streaming space, a space and an idea that has probably been banged into your head over the last couple of years. But this industry continues to saturate, and more entrances are coming into this space. It seems like every month. The newest one, and the next one, should I say, that's going to be released is Peacock, and this is Comcast play on the streaming service. It's kind of a nod to NBC, which is one of their largest subsidiaries. And this is going to be released April 15th for Comcast customers, and there's over 30 million customers globally. So it's a sizable market, and it's going to be released worldwide to everybody July 15th. And this streaming service is taking a little bit different approach than the rest of the space. Comcast isn't putting all their eggs in one basket, but rather investing in the slow and gradual transition towards streaming. So they want people to realize that NBC is still a great network and that cable is still relevant. And obviously this is because it's a relevant top-line driver for Comcast still, driving the majority of the company's top line. But so they're offering an ad-driven service that's going to be free for Xfinity customers. And what beats free? All the Xfinity customers are going to rush to try this service because there's really no risk in doing so. It's going to have a number of tiers for the service ranging from $0 to $10, and the $10 service is obviously going to be ad-free service. But having these tiers and having advertisement subsidize some of this cost is really going to be a driver with a lot less risk than some of the other players in the space. And advertisers are willing to pay a pretty penny for this space because of the rising media consumption of this streaming medium. So what's the big catalyst for Peacock? And one of the biggest ones is going to be the 2020 Tokyo Olympics, which are coming on screen at the end of the summer, at the end of July. And this is going to be a major catalyst as customers are going to have full access to this on Peacock because NBC has exclusive rights to this. Customers are going to be able to see all their events and all their favorite Olympic athletes on Peacock services through this platform. Peacock also has exclusive rights to The Office and Friends, which were top shows on Netflix, and these are actually going to be pulled off of Netflix and put onto Peacock. So, looking at some of the other services, Disney Plus has been the most successful recent service, and it came out November 12th of last year. It had enormous success, driving 10 million new subscribers in the first 24 hours of its release, and the stock is beginning to trade at growth multiples. So investors and analysts are extremely excited about this, and I am too. This service has a lot to offer, and as it continues to drive quality original content, I think there's a lot more growth in this space. Netflix, on the other hand, has started to see domestic customers level off, and so has the stock, unfortunately. This is the original streaming service, and it's kind of seeing a lot of competition in the space, and the saturation is hitting its top line growth drivers hard. And right now, its biggest growth driver is going to be international prospects. Unfortunately, they can't pull as much per customer from these international prospects as they do domestically, and this is concerning investors. And you can see here in this chart that Netflix has kind of traded sideways over the last 52 weeks. And Disney, on the other hand, a new entry to the market that's disrupting the space, has been trading up, and investors are excited about it. So looking at these two platforms, you've got to realize what investors are looking for, and they're looking for quality content that is going to be exclusive to these sites. And I think Netflix has done this in the last few months with two actually Oscar nominations for this upcoming award ceremony, and this is big for this streaming service. Disney, they've had blockbusters worldwide for many years, and we'll continue to have this for many years to come. And this transition to streaming service was only natural as their library of content has grown exponentially. So the next company coming into the space is going to be AT&T with HBO Max, and this is going to combine all of Warner Brothers content as well as a number of other networks, libraries, and it's going to be a rich library considering that HBO already has a ton of quality content in it already. But I expect this service to be put at a premium to all the other ones considering its quality content. So now the question is what to do with Comcast. Comcast is trading at relatively cheap multiples. And as you can see, it's been trading even lower recently. It's yielding investors an over 2% dividend, and the company has a diverse global operations that continue to pump out increasingly strong free cash flows, give them flexibility to invest into this new streaming platform. So I think the gradual transition into the streaming space is going to play onto their strengths, and I think we're going to see a lot of growth out of this company in the next few years. So right now, 15 out of 20 analysts are calling this a buy, and I am inclined to agree as a long-term investor. So thank you for watching The Fourth Revolution, and I look forward to speaking to you guys next time.